Qualitative characteristics of Islamic accounting information. The accounting and auditing organization of Islamic financial institutions specifies that accounting information should possess the following characteristics. Number one, relevance. That the information should be relevant to the decision-making process of users of the accounting information. This characteristic requires that the information meets the following three criteria. Letter A, predictive value, which means that the user can use the information to make predictive statements regarding the financial situation of the financial institution. In short, it must be useful in making forecasts. Letter B, feedback value, that the user can use the information to verify the accuracy of his previous predictions, meaning it must be useful to evaluate past decisions or forecasts. When taken together, predictive and feedback value, the relevant information helps users of financial information to evaluate past, present, and future events, or to confirm or correct their past evaluations in a decision-making context. And letter C, timeliness. In order to be relevant, timeliness must be considered. The information should be reported in due time in order to provide the user with updated information for his decision-making process. So the first qualitative characteristic of Islamic accounting information is relevance. Number two, or the second characteristic, is reliability, which is comparable to the reliability requirement of the IFRS, the International Financial Reporting Standards, which includes the need for a true and fair view, neutrality, and objectivity. The third characteristic, as emphasized by the IOF, is comparability. As with financial reporting under the IFRS, comparability is an important qualitative characteristic under IOF standards. Comparable financial accounting information allows users to identify similarities and differences in a bank's performance in relation to its own previous results and to those of its peers. The fourth characteristic is consistency, which means to allow comparison over time. The IOF, like the IFRS, requires consistency in the methods chosen from one period to another. And the fifth characteristic is understandability. This principle must be taken into account both by the accounting standard setters as well as the organizations applying the standards. Accounting information should be readily understandable by the users in order for it to be useful for the decision-making process.